Welcome guys, so module number 2. Okay, so I hope you learned something from module number 1. So module number 2, we want to talk about the types of trading. Okay, we want to talk about the types of trading, or the types of analysis. Okay, so we have got the fundamental analysis. We've got the fundamental analysis, and when we talk about the fundamental analysis, we are looking at the country's economic, social and political factors. Okay, so meaning stability in these factors leads to what we call it, stability in these factors leads to a stronger currency. Okay, but we won't focus on fundamental analysis in this course. However, if you want to learn more about fundamental analysis, you can leave a comment. You can contact me. Okay, so then if you want a video, or rather if you want a video on fundamental analysis, just leave a comment, and then I'll make sure that I create a video specifically for fundamental analysis. But we want to look at the technical analysis. Okay, this is what we will use in our trading strategy in this course. So when we talk about the technical analysis, we are talking about the study of the price movement, or the study of the historical data. That is technical analysis. Let's say, for example, when you open your trading view, and you see something like this is what we call technical analysis. Technical analysis. Okay, let's say the price is here. Alright, so we are using this data, okay, to predict the next movement. You understand? So this is what we call technical analysis. Now, in technical analysis, there is something that is so crucial that we call the market structure. So as a trader, you need to understand the market structure, because it helps you to it gives you that ability to bless the next trade. It's called the market structure. And the market structure, it comes in 3 phases. Okay, the first phase is called the uptrend, where it is let me try to demonstrate. Like, it's giving us these higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, something like this. So where it's breaking structure like this. Okay, where it's breaking structure like this, then maintaining these higher highs. This is what we call an uptrend. So the market will be going upwards. This is the first phase. So when you open your chart, you need to understand what the market is currently doing. Then we have what we call the sideway. Okay, so sideway, the market will be bouncing within ranges like this. The market will be bouncing within a range like this. So this is what we call a sideway market. So it is not going up, it's not going down, but it's just bouncing inside a certain range. This is what we call the sideway. Okay, let me say the SD. And then the downtrend, it is where the market is giving us those lower highs and lower lows, something like this. Okay, so breaking structures, while it's maintaining these lower highs. Okay, breaking structures while it's maintaining this lower high. So something like this is what we call a downtrend. So when you open your chart, these are the 3 things that you want to look at. Okay, the uptrend, the sideway, and the downtrend. So let's look at the charts. Let me try to demonstrate it on the charts for you guys. Okay, so as we mentioned, that there are 3 things that you need to take into consideration as you open your charts. So the first one is the uptrend, where the chart is making the higher highs and higher lows, and then with the sideway market, where the movement is just bouncing within ranges. Then we have the downtrend, where the market is making those lower highs and lower lows. So as we can see, this is the uptrend. Okay, this is an obvious structure. It's an uptrend. Or why is it an uptrend? It's because it is making those higher highs and higher lows, breaking structure. As we can see, this is a break of structure. Okay, this is another break of structure, and this is another break of structure. So from this, you can see that this movement is breaking structure and is maintaining its higher lows. And then we mentioned the sideway again. So from this rectangle here, this is our sideway. This is our sideway market. So the market is not going up, it's not going down, it's just bouncing within ranges. So at this point, it doesn't explain whether the buyers are dominating or the sellers are dominating. So when the market is like this, you have to make sure that you stay out of the market. So this is the range, the ranging market, and from the after the ranging market, you can see a nice movement to the downside. This is your break of structure. Okay, this is another break of structure. So as you can see, this is how you identify the uptrend, the ranging market, and the downtrend.